Alright then, good afternoon folks. We head into US trade on Wednesday the 6th of September. Now stocks under a little bit of pressure, as we were alluding to in this morning's video. We're speaking about the impact of higher oil prices on inflation, and you can see Wall Street eyes lower open on renewed inflation worries, economic data in focus. So the economic data, obviously a little bit later on, some services PMIs, do have the Canadian central bank decision, which, as I said earlier on, may not produce any sort of movement of much relevance. But it's a pretty tricky one. Pretty tricky one in terms of oil and the impact on inflation going forward. There's a lot of market participants, after having 24 hours to digest the new information, that seem to view the same sort of opinion. We can see, we'll jump across to the charts now in a minute, once we get around to it. But a bit of something I missed in earlier on the video was a comment from Japan's top currency diplomat, who sent a warning about the currency after it early dropped to a 10-month low. Now, we spoke in recent videos about the Bank of Japan intervening with dollar yen. They don't like dollar yen getting too high, with Japan being quite a largely export driven country. The price of the Japanese yen being a little bit weak is not a bad thing for them. But if that then persists and then the currency gets too weak, it then becomes a negative for their economy. As if it's a little bit cheap, things can be on a discount for people from other parts of the world. They'll buy more, increases business for Japan. But on the flip side, then with Japan, with the currency, if the currency gets too low in value, well, then it actually becomes a negative for them, as they are selling things too cheap as other people try and buy them. So they don't like it up here where it is at between 145 and 150. They intervened up at 152 a few months back, and normally before they do intervene, they do communicate to markets that they are looking at it. And I said on Wednesday, the authorities won't rule out any options on currencies if speculative moves persist. A comment apparently warning against a sell-off in the yen. And the more dollar yen continues to go higher, the more likely you are to see the Bank of Japan step in. So we'll have to keep an eye on that as we go on through the next few days and next couple of weeks, to see if the Bank of Japan do actually intervene if the currency gets a little bit too strong. Japanese yen higher off the back of that, plus US yields lower, which is a positive for the Japanese yen. US equity futures, European equity futures lower across the board, and they have increased downside over the course of today's European session. Not exactly a massacre, I know that most of these are red, but still a bit of downside in today's session. Across the board, rest of the world, talk about yields being slightly lower, bonds being purchased, yields lower. Maybe it's a bit of a safe haven play. Maybe expectations for the Fed to not hike interest rates further, but if that was the case, you'd likely see equity futures higher. So again, not a massive move, but we slightly bought off the back of a bit of safe haven flows. But global bonds mixed, US dollar mixed, Aussie and the Kiwi. You see Aussie higher and the yen higher, which means it's clearly not a bout of risk off trading. So Aussie and the Kiwi they've been sold off quite heavily, as you can see. Year-to-date percentages, 3-month percentages, and month-to-date percentage changes, all pretty negative in relation to the anti-Palladian currencies. But Japanese yen higher, you'd expect to see those two lower with it if it was a clear safe haven play. Then dollar strength as well, so not exactly clear cut analysis in terms of that. Retail sales in Europe not exactly positive this morning, slightly below consensus. Construction PMIs slightly positive out of the UK earlier on, but not too much to see there in relation to these different currencies so far today. Some slightly better consensus trade balance figures from Canada, but obviously the BOC, the Bank of Canada, their interest rate decision at 3 o'clock, it's obviously more important than those trade balance figures. But the Services PMI, again, higher than anticipated print, may put a bit of pressure on the Fed, although unlikely to hike interest rates, or extremely unlikely to hike interest rates at the next meeting due to recent economic data. If that then continues, does get slightly higher, it may bring further tightening back into the I say back into the equation, but back into the mouths of market participants. You can see stocks across the board, as I said, not exactly a massacre, but they do continue to grind lower. The S&P, the Dow Jones, the Nasdaq, and the Russell. Now, mainly the S&P, the Dow Jones, and the Russell. The Nasdaq is kind of holding firm. Nvidia continues to trade towards highs as well, so that continues to be a little bit helpful for the Nasdaq, the DAX, the Euro stocks, the FTSE, all downside in today's session, albeit somewhat of a bounce back in recent trades, certainly from the FTSE, but definitely negativity across stock markets so far today. And that, once you translate that over here and you look at the dollar's pretty mixed across the board. Doesn't really seem like it wants to do too much in today's session. Euro, bit of weak data, hasn't really affected markets, just chopped sideways for the European session. So as I said, Aussie, Kiwi, Euro and Sterling all choppy. Dollar Swiss, dollar CAD, dollar yen all choppy. Not much to see here in the world of FX today. You can see, bond yields slightly lower in recent trade, but from the open yesterday they are still slightly higher, but really them choppy as well, not really offering too much impetus in terms of markets. Gold pretty sideways as well. Oil's nearly given back most of its gains from yesterday, which did happen the last time. I was speaking about it on the trade floor earlier. The last time the production cuts were announced, you did see the spike higher, which is the expected reaction, and then you saw a complete reversal of the move and even a bit of a move lower, but that did then turn around a few days after and start to push higher once markets digested the effects. So they obviously cut production, or continue to cut in production, off the back of potential for some weak supply, with not exactly a flying global economy, but positive developments, but bullish developments, and certainly in terms of the price of oil yesterday. Does history repeat itself? Do we retrace all these moves and then continue back on higher? That would be the thought as of now. But markets relatively choppy across the European session today. Not too much here to see just yet unless you're a seller of indices this morning. But as I said, not exactly moving lower at that much of an aggressive pace, and certainly have stalled, gone sideways since about 10 o'clock this morning. Highlights on the calendar, as I said earlier on: Services PMI from the US may give us a further clue as to how the Fed may approach their next meeting. The Bank of Canada as well, not likely to give us much fresh impetus. They are likely to stick to the script all central banks have been sticking to. They don't want to hike interest rates further. They're going to watch the incoming economic data, and the incoming economic data is going to decide future policy decisions. So what do we do with that information? Not that much today at 3 o'clock.